save your way to $7,500 a day. That target equals $2.7 million a year. Siphoning a portion of a standard salary into a passive index fund will never mathematically reach that level within a normal working lifetime. Hitting the top 0.1% of income requires a chain reaction of leverage, where active cash generation directly fuels passive investments. Reaching this tier requires abandoning the concept of single income safety. You are building a professional system that combines multiple revenue streams, requiring high capital, skill, and the discipline to manage assets. This is the 5-year hybrid wealth blueprint. It maps out your capital allocation across 3 distinct engines: active real estate for large cash infusions, passive real estate for stability, and active stock trading for daily liquidity. Building this system has prerequisites. You need an initial seed capital of $10,000 to $50,000 for operations. More importantly, you must treat this as a CEO role. You are building a business, not a hobby. This 3-column redundancy is mandatory. This overlapping structure is designed to offset market cycles, ensuring that if one stream stalls, the others are positioned to maintain the target. By diversifying across unrelated asset classes, you reduce the probability of the entire system failing at once. Step 1 focuses entirely on year 1. Your singular objective is building an active cash generation machine. You are not buying rentals yet. You are manufacturing the capital needed to acquire them. This marketing funnel illustrates the required scale. To succeed in real estate wholesaling, you must drive 100 to 200 distressed seller leads into this system every single day. You do this through a combination of mass direct mail, pay-per-click advertising, and dedicated cold calling. The mechanics at the bottom of the funnel are straightforward. You find deeply discounted properties and put them under contract at roughly 70. This split screen tracks your dual transition. On the left, you buy underperforming units, renovate them to force appreciation, and rent them out. You then refinance the properties to pull your original capital back out tax-free, allowing you to repeat the cycle and multiply your doors. On the right side, you fund your brokerage account with $50,000 to $100,000 in wholesale profits. Your focus here is executing an income generation technique called the wheel strategy. The wheel strategy centers on selling cash-secured puts on stable, highly liquid, large-cap stocks. By agreeing to buy a stock you already want at a discount, you collect weekly premium income regardless of small market fluctuations. Your Phase 2 milestone is reached when your rental portfolio yields $30,000 a month in passive cash flow, while your stock market premiums generate daily cash. This pushes your daily average toward $5,500. This dual-track approach converts your linear hustle into exponential compounding. Your capital is now working around the clock across 2 completely disconnected asset classes. Phase 3 covers years 4 and 5. To break the final barrier, you graduate from single-family rentals to large-scale commercial syndication. Commercial syndication utilizes your proven track record to pool other people's money. You use this raised capital to acquire massive assets, like 100-unit apartment complexes or large commercial leases. Because you've found the deal and manage the asset, you act as the sponsor. This allows you to keep 20 to 30% of the overall property profits without tying up your own personal cash. Simultaneously, your options portfolio has scaled to over $500,000. By targeting a 0.5% weekly return through your established strategies, your stock income alone hits $7,500 a week. This focus on consistent premium collection minimizes the need for high-risk directional bets. When we tally the mature system, the math is clear. You have transitioned your 30 units into high-performing short-term rentals, with each luxury unit netting $3,500 in monthly profit. That portfolio provides $3,500 a day. Combined with $2,750 from automated wholesaling and $2,000 from your options portfolio, the system locks in at $8,250 a day. Transitioning to an Ester Propital is the ultimate wealth multiplier. It removes your personal financial limits and unlocks scalability that was previously impossible. Generating $2.7 million a year is useless if a lack of defense allows tax brackets and market volatility to wipe out those gains. This scale demonstrates your primary tax defense. By working with a CPA to secure real estate professional status, the heavy paper depreciation from your commercial properties can legally and completely cancel out the taxes generated by your active stock trading. On the corporate side, you structure your active wholesaling business as an S corporation. This precise legal structure minimizes the self-employment tax drain on your operation. In the stock market, you must follow one absolute, non-negotiable rule to survive drawdowns. Never risk more than 2% of your account balance on any single options trade. You now have the complete hybrid dashboard. It is a methodical 5-year machine built on aggressive early cash generation, exponential asset growth, and strict defensive buffers. But understanding Phase 3 does not build wealth. To make this math real, you have to execute Phase 1 today. Pick your lead generation channel, pull your first distressed property list, and launch your first marketing campaign right now.
I am Fiana, and you are watching the Roadmap channel. Don't forget to subscribe and like. See you soon.